let's talk about this squeeze. Brace for the squeeze. A big movement is coming to Bitcoin. But you know what? Wall Street right now can't get enough of Bitcoin. So it was just announced that asset manager Vanguard, with 7 trillion assets under management, has just purchased a 10% stake in Riot, which of course is a miner. Okay, so these big guys, we're talking about BlackRock with 9 trillion, Fidelity with 5 trillion. Now you got Vanguard. Okay, they didn't come out yet with saying, well, maybe they did already with this Bitcoin spot ETF. I have to check, but man, now they're up there. There's almost as big as BlackRock, and they're getting involved with Bitcoin. So Wall Street institutions are definitely trying to FOMO in right now before things get crazy. And they will get crazy. They always do. Before we get a spot Bitcoin ETF, what exists? Microstrategy. A firm with having 152,333 Bitcoin on its books. It is by far the most of any company out there, with the asterisk, because we don't know if someone on BlackRock holds more. They could. They very well could hold more. We just don't know. They didn't report it, but publicly known. And they basically, no one cares about their data intelligence, business intelligence division. Everyone only cares about them because of how much Bitcoin they hold. Rich Dad Poor Dad author Robert Kiyosaki just gave a new prediction recently. Also, there's been a lot of predictions. Standard Bank gave a prediction. Matrix Port, yesterday I covered, gave a prediction. Now he's giving a prediction which is very similar to theirs, but due to different reasons. So according to him, BRICS nations announced gold-backed crypto. US dollar will die. Trillions of US dollar will be rushing home. Inflation will be through the roof. Buy gold, silver, Bitcoin to 120,000 by next year. That's actually the same point of what the same dollar amount that Standard Chartered declared a few days ago. $120,000 by the end of 2024. Now you got 3 reports basically at the same number. He's mentioning it for different reasons. Okay, and this is a developing thing that you are seeing other nations, other countries get off the US standard. Okay, it started already. BRICS nations, obviously, they want to get off the USD standard, but there's other countries that are just trading with these BRICS nations. They're also starting to relax their US standard, and also Middle East countries, they're accepting currency for oil is also starting to accept currencies that are non-USD, right? So it's starting to happen, but of course, then the entire world's not going to get off the reserve currency right away. But eventually it's going to happen. Every single currency out there that ever existed eventually stops becoming the reserve currency. And I argue the best one, the most suited, would be Bitcoin, because it's the only currency, the digital currency, but the only currency that is non-sovereign to any country. No one controls it. And of course, the Bitcoin halving event, you know, this is a pretty simple infographic, I guess, or graphic. Every single cycle, you have a halving event, which if you don't know means that the inflation rate of Bitcoin gets cut in half. In 2009, you have 50 Bitcoins released per block. Then it went down to 25, then 12.25, then 6.25, and this coming one will drop it to 3.125. Okay, so obviously half of what it is now. And it's going to get harder and harder and harder to mine Bitcoin. And it's going to be harder and harder to find any new Bitcoins hitting the market, because the miners are just going to keep it all. So really, everyone is fighting for what exists today. And there's not that much left. John Bollinger, the inventor of Bollinger Bands, which a lot of people, a lot of traders use, right? Well, he's like, there's a squeeze coming. It's pretty obvious. The Bollinger Bands, you see, you have an upper band and a lower band and a mid band, and basically all bands and moving averages just look at what has happened before and puts an average around it. That's really it. But when you have very, very, very low volatility, so makes the upper band and lower band come together, and then you could see that point right there. It's about to squeeze because Bitcoin has been so solid at $30,000. And from a trader's perspective, whenever that happens, when you have a squeeze, there's going to be a volatile movement one way or another. It could be upwards, it could be downwards, but the way we are trending right now with momentum swimming upwards, I am predicting that this next move is going to be upwards. That will drive us higher than 31.6, which is a point that we have not been able to break recently. Okay, we're going to get pushed past it, and who knows where we will end, right? But there is going to be a squeeze. It's happening already. Just like when you squeeze anything, there's an explosiveness that comes afterwards, and that is what Bitcoin is going to experience soon. 14-day high-low, according to Glassnode, is also showing that volatility is extremely, extremely low. Okay? And again, whenever you have these very, very, very quiet ranges and low volume, volatility starts going upwards. You're going to have sudden blast off from kind of like a fractal pattern sort of view, right? I don't know, technical fractal pattern. I'd say this is fractal pattern, but anyways, you could see if you look at the left-hand side, that is our current movement. Right-hand side is back in 2016, going to 2017, and, well, you could see that the bearish period, which this is a 2-week scale, right? So it was 42 bars, so it was basically 84 weeks of down back in 2016, and that's when Bitcoin broke out and started heading upwards. And guess where we are now? Right at that 42 bars, which is, again, is 84 weeks. And you can see this new oscillator, price movement oscillator, PMO, has turned green just like before. We're a little bit past it, but still. So does that mean we are mimicking what happened in 2016, 2017? Quite possibly. Again, history doesn't repeat, but it tends to rhyme. Right now, it is definitely rhyming according to previous cycles off these cycle bottoms. We are definitely rhyming. Speaking of, spot Bitcoin ETFs, right? But there's other futures-based ETFs, and around the world, there's other trusts and ETPs, and, institutions are getting really, really creative with indexes that you can follow. There is one that's coming out that's not in the U.S., but overseas, where it tracks Bitcoin, Ether, and the dollar. The DXY. I mean, you're getting some of these fund managers to be real creative with what prices they track, but it's kind of interesting. Bitcoin, Ether, and DXY. DXY is important though. Whenever DXY goes down, you tend to see Bitcoin and crypto go up. So I guess that makes sense.